Miracle Mile Advisors is our guest today, and the topic is how do investments impact reinsurance portfolios? To get things underway, here now is Doug.
Welcome, everybody. We're glad you're here today. We're happy to be able to present Miracle Mile Advisors. We're going to have Daniel Tang, Peter Karp, and Harris Hanafi will be speaking to you today on the topic of reinsurance portfolios. We started this webinar series about 2.5 years ago, and our objective is to bring new ideas to the table that can impact your expense categories, new audit and revenue opportunities, as well as other opportunities to enhance your asset base, reduce your costs, improve profitability. We run these on various topics, various suppliers that we know and we trust. And we're happy today to provide Miracle Mile Advisors to you. So with that, take it away, Daniel.
Thanks. Hi, everyone. Thank you so much for being here. My name is Daniel Tang, and with me, I have Peter Karp and Harris Hanafi. Before we get going, I wanted to personally thank Doug, Chris, David, Chuck, and the rest of the Strategic Source team for putting on this fantastic webinar. So thank you, David. So at Miracle Mile Advisors, we pride ourselves on the relationships we build and the success in our clients' lives as a result. Our 98% client retention rate is a testament to that. We've got 7 offices across the United States and manage over $5 billion. So in today's complex and challenging economy, dealers, their teams, and their families need seasoned, skills, and engaged financial advisors to optimize their investments and wealth strategies. And for dealer principals with reinsurance programs in place, that conversation begins with the execution of a proper investment strategy. So we'd like the dealers and their management of the audience to get a chance to reflect on their current programs and investment portfolios to reevaluate what's being done now to optimize your wealth building strategy. Now, before I get any further, I wanted to let Peter and Harris introduce themselves to give you a little bit of background on their experience working in the automotive reinsurance industry.
Thank you, Daniel. My name is Peter Karp. I'm managing partner of Miracle Mile. We've been in the reinsurance space for over 15 years, managing assets for dealers and their families. And the main thing is the client communication that we have has really driven our success with dealers across the country. Harris?
Hello, everyone. I'm Harris Hanafi. I'm thrilled to be here with you today. Before joining forces with Peter Karp at Miracle Mile as the Director of Business Development, I specialized in reinsurance at Morgan Stanley as one of a handful of advisors with a niche in the reinsurance sector. Prior to that chapter, I spent almost 2 decades as the owner of 4 car dealerships in the Northeast, where reinsurance played a vital role in building substantial wealth for me and my family. Today, my journey combines financial expertise with an entrepreneurial spirit. I'm eager to share insights and experiences from nearly 2 decades of experience in the automotive industry. So let's make today fun and exciting and informative and engaging. Thank you for having me.
Awesome. Thanks, Harris. Thanks, Peter. So some of the things we're going to cover today, we're going to address the role of an investment advisor as part of the reinsurance team and discuss how your portfolio construction affects the performance of your reinsurance program. We're going to discuss what a fiduciary is and why it's important that you have one on your team. And at the end, we're going to cover some questions to ask, about your current program and questions to ask your current investment advisor. Now, before we jump in, we have a few poll questions for you just so that we can get to know you, the audience, a little bit better. And then we've got 2 more questions after this one. Dealers and the management folks in the audience, are you currently in a reinsurance program? And the last question is, if you've done reinsurance in the past, how much experience do you have? And if you're currently doing reinsurance, how long have you been doing it for? All right, David, I think we're good to move on. Just some good information on the audience. Really nice meeting you all. Again, really happy to be here and excited to get into the meat and potatoes. So, Peter, I'm going to turn this over to you. Tell us a little bit about, where the rubber meets the road.
Thanks, Daniel. Where the rubber meets the road is really communication and coordination. What we see out there with on the investment advisory side, we get to sit back and get to see the components of the reinsurance company. So, regular sessions attendance is important to understand where you are, where the dealer is, also the agent, and the state and the status of the program. It's very, very important to understand, as we go into these sessions, what we find is that's where the magic happens. We're talking with the dealer, they're telling us their goals. After the session, we find out exactly, what's going on in the dealership. Also from the agent, just the products and the services that they're actually doing. And it really helps the investment advisor manage the money effectively, because that dollar cost averaging, that constantly putting premium in, makes the difference in your investment return. And different dealerships and different programs see differently, which is really, really important. Also, just knowing what your performance is. I mean, I can't tell you how many dealers I find that don't know how their reinsurance program is performing, not just from an investment standpoint, but also from a production standpoint. And that is very, very important to track, because the goal here is the investment performance should pay, and we're trying to pay for all the claims and expenses of the program. Just some of the things that helps the dealers in their dealer planning is investment advisors should provide an investment outlook specific to the location and the area that the dealer has dealerships. I mean, that's very important in addition to a more macro view. Some of the things that investment advisors need to do is also integrate the reinsurance into the financial planning of the individual dealer. That's very, very important, because this is keep in mind, reinsurance is a wealth building tool, and you have to use it effectively and know how it plays, the role it plays in the overall program. And then succession planning. I mean, most of our dealers are family owned. Dealers want their monies that they work hard for to not just grow, but also if something happens to the dealer, they want the dealership to go to family members. They want their assets to go to specific people or entities. We're finding that the investment advisor really should be focusing on that. And then tax strategies. I mean, there's tax mitigation strategies that you could utilize within the reinsurance company. So not having your investment advisor at the meeting and not engaging with the investment advisor on a regular basis, be it the agent or the dealer, is just not an option for a well-run plan. And then the last is, how do you get to these funds? Like I mentioned, this is a wealth building program, but how do you actually get to the money? And what is the most effective way to utilize the funds, whether it's a loan or a distribution or a combination of both? So the investment advisor tends to be the glue that holds the program together from a financial standpoint, working very closely with the agent. So, some of the things that we do for our dealers, being just advocates for them, is Harris is going to go over, we're a fiduciary to the dealer, which allows us to sit in a little different position, but also really looking at multiple custodians. Most investment advisors are affiliated with one custodian, and that might not be the best custodian for the dealer. There are a lot of options out there. Also, what you've noticed in the last year, a lot has changed in the banking and trust companies. With banks and trust companies, they're actually getting out of the reinsurance business, and they're minimizing some of the programs that they have available. And in that case, we have to then go out and do a request for proposal for those custodians. It also is a way to lower costs. And if you're working with the right custodian, it's the service is where it needs to be, and you're getting, for the size of the plan, for the size of the program, you're actually getting priced. You're getting value from your custodian, and that's what we want to do as your fiduciary. So, looking at other benefits of having an investment advisor is lowering the reinsurance costs across the board, and we work with the agent to do that. And like I said, there's the agents bringing some ideas, but we're bringing ideas too on how to lower the cost, and that all encompasses staying with the investment policy statement. Even though we provide customized portfolios, and most investment advisors, some investment firms do, most of them have what's called a target date fund. So you're just in a bucket with other dealers. And what happens there is you're not gauging the investments with your goals as the dealer, whether it's enhancing the dealership, buying a second home, investing in another dealership. This is why the meeting with your investment advisor is so important. And then the sessions review. I can't emphasize how important it is during the session review to have that active guidance. And things do change quarter to quarter, day by day. And the agent and the dealer developer is in there, and the investment advisor should be getting engaged to help see the whole picture and help the dealer maximize the benefits, not just from a tax side, but also to grow the assets. With that, the most important thing is the fiduciary standard and being a fiduciary. And I want to turn that over to Harris to talk about what it means to be a fiduciary to the dealer and to the agent.
Thank you, Peter. So investors, they get to may choose a fiduciary over a broker dealer for several reasons, right? Fiduciaries and broker dealers have different standards of care and obligations to their clients. So number one is the legal and ethical standard. So a fiduciary is legally bound to act in the best interest of their client. Their primary duty is basically to provide advice that is solely in the client's best interest. A broker dealer, on the other hand, which is like one of the bigger wirehouse, the big wirehouse firms out there, they're held to what's called a suitability standard. Suitability standard basically means that they must recommend products that are suitable for a client based on their financial situation and objectives, but not necessarily the absolute best option. For me, I didn't like this coming from a big wirehouse firm. Number two is the fee structures, which is very important because everyone wants to know where they're paying their money, right? So fiduciaries often work on what's called a fee-only basis. They basically charge a transparent fee for their services. This fee structure can reduce conflicts of interest as their compensation is not directly tied to specific financial products. Broker dealers, on the other hand, they often earn commissions based on the financial products they sell. This commission-based model can create potential conflicts of interest, as advisors may be incentivized to recommend products that generate higher commissions. Another thing that I did not like coming from a big wirehouse firm. Number three is the holistic financial planning. A fiduciary typically takes a more comprehensive and holistic approach to financial planning. They consider the client's entire financial situation, including their investments, taxes, estate planning. Broker dealers, they focus more narrowly on buying and selling securities. Their advice may be product-centric rather than addressing broader financial planning needs. Another reason that, for me, the big broker wirehouse firm relationship wasn't working. Number four, disclosure of conflicts. So fiduciaries are obligated to disclose any potential conflicts of interest to their clients. This transparency helps the clients make more informed decisions. A broker dealer, on the other hand, While there are disclosure requirements for broker-dealers, the suitability standard allows for certain conflicts that may not always be explicitly disclosed, right? And the last and the final piece of this whole fiduciary standard is the client-centric approach, right? So fiduciaries prioritize the client's best interests, seeking to build a long-term relationship and focus on the overall financial well-being of their client. Broker-dealers, on the other hand, they may be more transaction-oriented, executing trades, focusing on short-term gains. You know, another further reason to really think about fiduciary route or the broker-dealer route. Ultimately, the choice of fiduciary and broker-dealer advisor depends on the investor's preferences, financial goals, and the level of trust and transparency that they seek in their financial relationship. But investors should carefully consider the advisor's obligations, the compensation structure, and as a former dealer, when I hire my advisor or anyone that I'm paying for their services, I want them to sit on the same side of the table as me. It seems logical, but there's so many times where dealers are just not getting a true fiduciary sitting with them alongside the same side of the table. And Peter, you can take the next slide.
Yeah.
Oh, excuse me. You want to talk a little bit about the, I'll talk about the four-legged stool, if you can just kind of introduce that a little bit, and then I'll go from there.
Harris, I'm curious. When you were a dealer, did you meet regularly with your investment advisor? I've never asked you that question.
I honestly, my advisor, God bless his soul, I've been with him. I was with him for 13 years. I never met him. I didn't even know what he looked like. And then when I finally put my portfolio in runoff, and when I got out of the dealership business, I sent them a text message. I said, hey, by the way, here's a picture of who I am that you've been talking to for the last 13 years. So for me, it was, you don't want that kind of relationship. You want your advisor to sit with you at the table. Like you need to be present. You need the dealership and the personnel there, they all need to know who the advisor is, because there's so much more involved than just picking up the phone and talking to your advisor halfway across the country, never knowing what he or she looks like or even shaking their hand.
Harris, can you go over the team and the four-legged stool?
Absolutely. So the way Miracle Mile functions is we operate with a very structured approach known as the four-legged stool. It's a very structured framework that involves different components working together seamlessly. I'm going to break it down for you. Okay. The first leg of the stool, this is your agent, or in your case, or in the dealer's case, your warranty or gap representative. So for me, it was my portfolio rep, because that's who I did my reinsurance with. This leg ensures the accuracy of your reinsurance account. So they would cover your sessions, they would go over your claims, they would go over monies earned and unearned, monies that were ceded, all those transactions. The second leg of the stool, this is where the dealer performance rep is involved. That's where outside reps come in and help the dealerships refine their strategy, their existing strategies, and they keep refining it so they can be more successful. The third leg of the stool is the dealer, right? Serving as the third leg, the dealers play a very crucial role in making sales happen. How? They focus on aspects like vehicle selection, warranty placement, making sure you're putting the right term on the right cars to keep claims down. Why would any dealer want to put a 10-year warranty on a used car with 80,000 miles? It makes no sense. Clearly, there's going to be a claim. So the dealer has a very important role in the grand scheme of things in this plan that we're talking about here. The fourth leg of the stool is the advisor. In this particular case, the Miracle Mile advisors. This is the final leg where we invest your ceded premiums. When I say ceded, it's the warranty remits that your controller or your CFO does at the end of the month for the sales for the preceding month. When the money gets seeded into the portfolio, what we do is we generate income to offset. So when you seed that money over, we invest the income. The investment generates further additional income, and then those incomes are supposed to pay your claims and promote growth in your portfolio. Now, at Miracle Mile, we believe in a hands-on involvement, and this approach that I just mentioned to you above, it's a collaborative approach, right? We work closely with the other legs of the stool. So often there would be 4 of us. We would come and join the other members, and we would come to your dealer sessions on site. We would sit with you, the dealer, and the other members of the stool, and we would go over your sessions with you right then on the spot, not over the phone, not halfway across the country, not once a year. We would be there with you. And this ensures a very comprehensive strategy, and it emphasizes the true commitment of a true fiduciary. Now that we've covered the intricate workings of the 4-legged stool at Miracle Mile, I'd like to pass the baton over to my esteemed partner, Peter. He can now shed some light on the nuances and the distinctions that make our approach unique. Peter, could you please share with our wonderful audience why investment returns are critical to the program?
Well, first of all, the investment returns are critical, but what also is critical is adhering to the investment policy statement, right? And it's that balance between adhering to the investment policy statement, getting returns from the portfolio, outstripping inflation. And that's very, very important because the cost of servicing this goes up. I mean, the cost of servicing a dealer servicing their customers go up. So you want the money to go up just sitting in a money market, because in a money market, first of all, you're not going to keep up with inflation. And even if there's some fixed income, some bonds, short-term bonds with money markets, again, isn't going to get you to the place that you need to pay your claims and expenses. So having those investment returns matter. And you could see the difference between, pushing the investment policy statement, and each program has a different investment policy statement. They're slightly different. Some are the same, but most of them are a little bit different. Also, how the monies get to the account that we get to manage, or the investment manages, is there's different processes. So it's important to understand that as a dealer, and your agent and your investment advisor should be explaining that to you. So in 10% in stocks, if you look at a return from 1980 to 2022, if you have 10% in stocks, your return would probably be 7%. But with many of these programs, you could have more in equities and more in stocks, and that pushes the return higher. Keep in mind, these are equity returns. These are stock returns. With a good investment policy statement, there's a balance between stocks, bonds, cash, alternative investments, commodities. So that blend's important, and that's the discussion that the investment advisor should have with the agent, and more importantly, the dealer.
Yeah. The investment returns do matter, and it matters how your accounts are positioned. So again, our goal in presenting today is just to show you what a well-functioning advisor relationship looks like. So some questions to help you reflect on your current program. Who's my current investment advisor? Are my accounts being actively managed? When was my last review, and am I getting the attention and level of service I should be getting given the current fees I'm paying? So I'm curious, for those of you in the audience, when was the last time your advisor visited you at your dealership to go over your investments? David, could you put that question up? So, let's go on to the next one. Peter, maybe you can cover a few of our recommended questions for those of you with current advisory relationships.
So thanks, Daniel. So if you have a reinsurance position, it's either at a bank, a trust company, or a brokerage firm. And the number one question you should ask once you find out who your advisor is, or who's managing the funds at the bank or the trust company, is, are you a fiduciary to me? That is really, really important. And from how they answer, you'll know whether everything is in your best interest, and it's not just a suitability, but something that fits in your overall portfolio long term. The second question is, why is my reinsurance portfolio asset allocation constructed the way it is? And how they should answer is either, this is as per the investment policy statement, and really say, well, when was the last time you've gone over the investment policy statement, and maybe we should go over that together because there could be other opportunities. That's what your investment advisor should be doing for you. And then the other is, do you manage my reinsurance accounts with the rest of my investments? So, and you can know this by if they ask for your other investment statements. If they're asking for your 401ks, they're asking for your trust account, they're asking, which is your taxable monies, or your IRA accounts, or just your other investments, then they understand how to position this with your other assets, which is very, very important. And do I own mutual funds? Most banks and brokerages, as Harris pointed out, they collect fees from their investments. It's important to know how much you're paying, not just to your advisor, but how much are the fees in of the investments that they're making on your behalf. And then money markets. Most of these programs sit with a large share in money market, or what's called insured savings accounts. Insured savings accounts are a profit center for the bank and the trust company. They're not for the investment advisor. And this is why being a fiduciary is so important. And we actually shop custodians to get our clients the highest money market and insured savings accounts rates. And then what are the expense ratios? So again, it's not just mutual funds that are in these reinsurance accounts that we see when we're looking at what other investment advisors are doing. They have other different investments, and those could have ongoing expenses too. And again, it's getting the most out of your program. And this is what your investment advisor helps you do. And if you don't have one, or you're not engaged in it, you're missing this, as Harris says, the leg of the stool, one of the legs of the stool. And if you sit on a three-legged stool, it's not as steady as a four-legged stool. Daniel, let's open it up, or Doug or David, let's open it up for questions to our audience.
All right. We can have people ask questions via the Q&A button at the bottom of your screen. They come straight in. And let me take a look at
well, this is
here. Oh, go ahead, Doug.
This is Doug. How is it typical that most dealers will have only one reinsurance provider, or are there multiple across groups? Do they tend to leverage and have just one provider, or could there be multiple organizations supporting them?
Yeah, so I'll take that. Thank you for the question. So it's like having one quarterback, right? When you have two quarterbacks, you have what's called a quarterback controversy usually. And having one quarterback is usually the best way to go. I do want to, a lot of dealers that we see, they have multiple reinsurance positions. They have one that they're probably seeding, and then they probably have maybe a couple or a factory program that should be looked at. If you're working with a fiduciary, they can help you with those other programs. And so, and make sure those are integrated. And they might have other investment advisors. There's some programs that you have to use a specific bank or trust company, but it's important that your quarterback, your investment advisor, one investment advisor is understanding how the pieces fit into the overall puzzle.
Is it common, Peter, because there's a lot of buy sells going on right now, when a group comes into a dealership, do they tend to terminate that reinsurance option and then leverage the options that they have relationships with the acquiring company?
Yeah, so that's interesting. It's so when let's say a dealer sells, Harris, can you just go, like when you were ending your reinsurance program, which option did you take? And then I'll fill in some of the blanks here.
So when I sold my business, or when I got out of the business, is you can hold on to your reinsurance company, but then, for example, if you have no one to submit for claim or reimbursements or refunds, if none of your personnel is there at the store anymore and you have this reinsurance company running with unexpired warranties, somebody's going to have to take care of that, right? So what I did is I said, no, I don't want to deal with that after I'm done because I don't have any more personnel. So the company that I dealt with, Portfolio, they came to me and they said, okay, well, you have X number of warranties or out on the road. They're going to expire, say, in 3 years or 4 years, or they're going to earn out, basically, is we can give you a settlement today for those. And so I actually went that route, and I put my portfolio or into a runoff, and then they cut me a check, and then I closed business. And then from that point on, now those warranties are property of Portfolio, and then they're gonna deal with the claims, the refunds, and everything else.
Okay,
So that's how I did mine.
got it.
But Doug, there's other, you could keep your reinsurance company going. And some dealers, we have, it's slowing down a little bit. Some of our dealers have sold in the past, and they keep their reinsurance position open. They know who's buying their dealership, and they feel very comfortable with that tie back to that new dealer. So it doesn't, this is where it comes into having these discussions, not just with the agent, but also the investment advisor, so they understand, not just what the options are for the dealer, but telling them what are the upside and downside given the type of cars that they're selling. It's very, very different given the type of dealer. And this is why having an investment advisor and an agent, for that matter, that is really engaged will allow you to get the most out of the program. So great question, Doug. Next question.
Again, attendees can ask questions via the Q&A button at the bottom of your screen. And well, here's one. Why should I consider starting a reinsurance program?
Harris, you want to take that? That's a good question.
Sure. Well, there's several reasons, right? So before I had a reinsurance program, the first 5 years I've been in the business for almost 20 years, right? So the first 5 or 6 years, I was in a retro program. Some agent came into my office, said, great things about this program. I got on the dealership was making money on the back end at the store level, but the cost of all those warranties and gaps that we were selling apparently was supposed to come back to me after, we submit 80 contracts or 100 contracts or 60 contracts, whatever that quote unquote rule was with those guys at the time. It was all fluff. I mean, at the end of the day, when I wanted my information, it was always today, tomorrow. It was never accurate. The reporting was horrible. And at the end of the day, if you're selling warranty, the store is making money, but the cost of the warranty and the gap, if that's your money, why are you leaving money on the table? Like, that's why you should have a reinsurance company. So every time, say your warranty costs $600 to the store, that $600 sits in a reinsurance company. If there's no claims against it, that's your money. You could borrow against that money tax-free and then pay it back as you do payments from the dealership back to your reinsurance company. So it's going from your right pocket to your left pocket. With the retro program that I was on, I made money on the store level, but then that's it. I never saw any money on the cost of the warranties. It went to the pockets and the coffers of that company that signed me up. And then years later, all that money that I thought I was supposed to get, I never wound up getting it because there was a huge problem with proper accounting that they couldn't figure things out. And you don't have those problems with a true reinsurance company. It's your money. It's kept onshore with all the known banks that you guys know, Wells or whatever bank you have. It stays here onshore. You get monthly statements. You see your money in real time. We have a dashboard at Miracle Mile that you can see your reinsurance accounts, your investment incomes in real time. The question is, why wouldn't a dealership do it? I mean, it always kind of bothered me a little bit. I'm like, this is your money and you're leaving it on the table for someone else to take. And I never understood that. It took me 5 years where, I felt it, but for the next 15 years after that, I never looked back.
And we help dealers, and thanks, Harris, for your perspective as a dealer. But we have dealers that do factory, and with a lot of factory programs, you can actually manage the money. Half the battle is knowing what questions to ask if you're doing business with the factory, and or what questions to ask to your current provider. I mean, look, we have some dealers on the call. We have some seasoned people on the call, and even with people that have reinsurance companies and have been in the business a while with a good program, still, it's tough to understand all the nuances of this. And this is why having quality vendors that you can work with that are there, that's returning phone calls, that are showing up, that are engaged with you, that care, that are fiduciaries, makes all the difference. And hopefully your investment advisor is that, your current investment advisor is that person. Next question, Doug.
Yeah, here's another. What are the methods of taking money out of a reinsurance company?
Okay, so I touched upon this before, but you could take a distribution and just pay taxes on it. You can do what Harris mentioned, take a loan, tax-free loan, and use the monies. And your agent should be able to work with your provider to come up with how much money you could actually take as a loan. And then at the end, like Harris mentioned, if you don't want to keep your warranty company going in what's called runoff, they can recapture it. And they offer that to you, and they will do the analysis. Any other questions at this point, Doug?
I see we're coming up on 20 till the hour. So I think any other questions, we can get a chance to connect offline. You'll get a chance to get our contact info after this call. So we can address any other follow-up questions, because we did have a few others, but we want to be sensitive to your time, because we do have some limitations here. So let's move on, and I'm just going to touch briefly on some of the services your investment advisor should be doing for you. So your reinsurance account, again, should be managed in conjunction with your entire financial picture, right? Your advisor should be looking at creating financial plans, doing real estate analysis, tax mitigation planning, insurance, estate planning, looking at 401ks and the rest of your investment portfolio. And given our conversation today, I'm curious if for those of you not doing reinsurance, how soon are you looking to start a reinsurance program, if at all? So David, I think this is our last poll question, so I appreciate all the engagement from the audience up to this point.
While the polling is going on, we're coming up to the end of the year. This is the perfect time to get your fourth quarter session, share it with us, and get your investment statement. Send it to us as a PDF, and let's see if you're getting the most out of your program. And if you are, that's great. Continue what you're doing and do more of it. If you're not, time is ticking, and really these reinsurance companies really start to build wealth after 2-3 years. So just like the contracts that you're writing, it's a long-term program, and every year that goes by that you're just in a factory program only, you're leaving money on the table, or your money is not invested. We're having a great fourth quarter. In fact, last year was a phenomenal quarter for investment income. Well, if you were in a money market, congratulations, you might have been getting 4.5%, but you left a lot of money on the table, which is for you and your family. So with that, I'll turn it back to
Peter.
Doug. Go ahead.
I'm sorry, if I can add one more thing, Doug, before you take over. At one of our session statements that I went with Peter, I just wanted to add this to the presentation today. We had a very successful dealer with multiple rooftops. He looked at his son at the session, and he said to his son the following. He goes, "I'm not in the car selling game. I'm in the reinsurance business." That day, that spoke a lot of volume to me, at least, because he understands the program and what it can provide for his wealth generation for his family. And he had multiple rooftops, super successful guy, and he got it. And if I can leave with anything today, just take that and understand what I just said. And then if you guys want us to call you back and speak to that, we'd be more than happy to. But that was very important that day, was what he said to me.
Thank you, Harris.
Yeah, and once again, we really appreciate all of you for joining us today. We hope this presentation was informative and helpful and just in raising some action items for your current investment advisors going into the end of the year, the beginning of next year. So again, any follow-up questions, you'll get our contact info after this call. Let's connect and get a second pair of eyes on your situation. We're just to show our face again, we're not just a one-man show over here. We've got a full team built out to support our dealer clients. And we're really appreciative that Doug and the rest of the Strategic Source team let us present again today. So Doug, with that, everyone enjoy the rest of your holiday season, and I'll turn it back over to you.
Happy holidays.
Happy holidays.
Well, thank you, everybody, for joining us today, and especially the Miracle Mile team. Very informative session. My understanding is that this is a big, important component of a dealership income, and having the right team to help you manage this is going to be critical. So we appreciate the informative session that you gentlemen had today. Thanks very much. If you're a client of Strategic Source today, we appreciate your business. Thank you. We hope that you have a great Christmas and New Year's and happy holidays. If you're not a client of Strategic Source, and if you're interested in learning more about our services and how we can help you reduce costs and improve your profitability, please contact us at sales@strategicsource.com. Reach out to us at 612-386-3898. We'd be happy to chat with you and give you our perspective on what the opportunities might be. But with that, I would say Merry Christmas, Happy New Year's, Happy Holidays to everybody. Thank you for attending today.
Thank you.
Happy holidays.
Thank you.
And everyone, let me bring up a post-session survey. You spent almost an hour with us. We'd love to get your feedback in this 2-question survey, knowing what you think makes these sessions better. Thanks, guys, for presenting today. Appreciate everyone's time. And we look forward to you joining us on future sessions with Strategic Source. Have a great rest of the week, everyone.